All right, so let's go ahead and get started and get into this. We're going to be talking about how to find deals that turn profit today, right now. So you're not waiting for it to be fixed up or anything like that. You're going to actually start doing deals right away. So let's get into that and talk about it. What we will be discussing today, let's go over that. We're going to talk about the one and only thing you should care about as a real estate investor. You don't have to look at a bunch of stuff. There's really only one thing that you need to worry about or be concerned about as a real estate investor. We're going to talk about that. Next, we're going to talk about how to find properties that have what you want, that have exactly what you want. So you're not sitting around guessing or looking for properties. How many of you all have done driving for dollars, or you've done cold calling and you're looking for abandoned houses where the owner doesn't want it and stuff like that? And that kind of stuff has been on your plate and that's what you've been looking for. I'm going to show you how never to do that again. I don't suggest that. And instead, you can get the right people calling you. So how would you like it if you didn't do anything and they just called you and said, hey, I want to talk to you about buying my house? And then we're going to talk about why you don't want to wholesale and what to do instead. Do we have any wholesalers on this call tonight? Is anybody a wholesaler? I'm not going to bash wholesalers. I understand wholesaling is where a lot of people start off, and you may start off as a wholesaler thinking that this is the best way. But hopefully tonight I'm going to show you a better way, a better option for you to get into real estate and what you can do. Okay? Can you guys hear me okay and see the screen okay? Just give me a thumbs up in the chat so I know that you all can hear me and see me okay. All right, so that's what we're going to be discussing tonight, how to find the properties, what to do instead of wholesaling, things like that. Okay, very good. Thank you. All right, so first of all, who are we? Who am I? And what is this all about? My name is Art, and this is my wife, Aisha. We have been real estate investors for literally over 25 years. We've been doing the same strategy for about 10 years, and we've been very successful with it. We started with very little. We started with very little when we began. We started when we were in our 20s. We were like 22, I want to say, when we got married. And when we started at like 20, 21 and 22. We made a lot of mistakes. We did not know what we were doing. We went through a couple of courses. We messed those all up. And we kind of just did trial and error for a long time. And so the good thing is we made a lot of mistakes. So hopefully by learning through us, and that's why we do these videos, hopefully by learning something through us, you can avoid some of these mistakes, and you can start off in a better place. Okay. We created QuickTurn, which is our process from wholetailing. How many of you all have ever heard of wholetailing? If you haven't, that's okay. But we started off from wholetailing, and we generated freedom without being landlords. Now, when we started off, we were landlords. We bought about 36 properties in 3 years, and this was in our early 20s. We were rushing, we were fighting and going for everything we could, and we realized after getting those 36 properties that it was not what we wanted to do. It was not that profitable. It's not something that we actually liked. So we got out of that and we sold all of those properties, which was actually a blessing because we realized in that time that we sold those properties that selling properties isn't bad and we like the money. So that's kind of how we got into the business that we're in now. And we kind of trial and errored and flipped around a lot, but it worked out. Okay. Our mission is to help you do the same thing that we do, only faster and with less mistakes. So hopefully we can show you some skills and some things that will help you make more money and do better in real estate. And they're very relevant to now. I found that real estate works in cycles. So as long as you know the cycle you're in, you can make really good money in any cycle. You just have to understand what you're in. So we'll talk about that a little bit. All right. So first, what is the most important thing when investing? What should you be focused on when you are investing in real estate? If you're going to start, should you be focused on how many doors you have? Should you be focused on how many tenants you deal with? How many contractors you can keep busy? We only have to do one job well to make money in real estate. I don't care what anybody tells you. If you do this one job well, you will make really good money in real estate. And that job is to find properties that have high equity. Find sellers that own property with high equity. High equity is money where they don't owe a lot on the property. So the house is worth $100,000. They may owe zero on it. They may owe $10,000 or $20,000, but the majority of the money they have is equity. Okay, if you can learn to identify properties with equity, you will make really good money and you will be able to do a lot of deals and you'll be happier in life if you can do this. Okay, so what does equity rich really mean? Equity rich is just a property that more than half of that property, I like to say more than half of that property is available as equity. So again, if it's a $100,000 house, at least $50,000 is paid off and they own $50,000. Now, why does that matter to you? The reason that matters to you is because normally we are taught in real estate there are two ways to make money in real estate. There's either sweat equity, where you're buying a house and fixing it up and then getting it nicer than it was, and that you put in your sweat and that increases the value, and that's how you make money. Or you're going to make money by wholesaling, maybe trading it off to another person, that kind of thing. Or you're going to basically sit on it and let it increase in value as you rent it out over time. So what we do, which is a little bit differently, is we don't look for equity. We don't look to build equity or go after finding, to sweat equity. We actually look for a simple way to buy property under market value. And here's the thing. You're not hoping that some seller sells it to you at a discount. You're not hoping that the seller is a bigger fool than the next person. You're actually going to use a mathematical calculation to find these properties and identify them. And then once you let them know that you are looking the right way, they will contact you. So no more cold calling, no more bandit signs, no more Facebook ads running $6 million worth of Facebook ads. You can do this in a very simple way and find under market value properties. And here's the thing. Just because they're market value doesn't mean that's what you're paying for them. We'll get into that in a second. We're going to also talk about a 10-minute profit scan to confirm your spread. Now, your spread is how much you are going to make on the deal. That is what you should be concerned about first and foremost. I'm more concerned about how much I'm going to make on the deal than what condition the house is in, the neighborhood the house is in. Anything else, I want to know that I'm going to turn a profit, because the last thing I want to do is get into this deal and get a lesson that I did not make money on. And that happens a lot in real estate. You can get a lot of lessons where you don't make money, and hopefully I can help you avoid that. Okay. Now, the next thing is no wholesaling. You will own this property. Now, I'm not saying you're going to own it very long, but you will own this property going through this process. Now, the reason I like owning the property as opposed to wholesale, do we have any wholesalers on this call? If you're a wholesaler, just say me or something like that in the chat and let me know. Nothing wrong with wholesalers, but I will tell you this about wholesaling. It is very shaky when you do wholesaling, because it's very easy, because you're just putting a contract together. Sellers are very easy to try to get out of your contract. Investors can sometimes try to get around you and your contract. Your deal can fall apart while you're trying to find a buyer. You got to literally tell your competition, which is other buyers, about your deal, and hopefully they don't kind of squeeze you out of the deal by trying to go behind your back. When we own the property, all of that goes away. When we own the property, none of that bothers us. None of that happens. Okay. So that's the difference between what we do in wholesaling and why it makes a lot of difference. So let's talk about why equity first matters. Why do we want to focus on equity above everything else? Let's be clear. Profit is made at the purchase of real estate. It is not made when you sell the property. You realize profit when you sell the property. You make the profit when you buy the property. If you put together a good deal, there's a very strong chance you're going to make profit. If you put together a crappy deal, there's a very strong chance you're not going to make money unless you do something drastic or the market just happens to change in your favor. But I would rather be more secure in knowing I'm going to turn my profit. Equity cushions your risk. The more equity in a deal, the more risk you are taking off of your plate, because you can be wrong when you have a lot of equity. Does that make sense? You can be wrong a lot if you have a lot of equity. If I'm buying a house that's $250,000 and I'm getting it for like 112, 115, 120, I've got a huge amount of space that I can make a mistake on. Let's say I was wrong and it was only worth 220. Let's say I was wrong and it needs some work or something like that that I have to account for. I still got, let's say, 70, 80, $90,000 that I can move around or that I can play with in equity. And this is without me doing any work. Equity cushions your risk. It's literally your caretaker. It's taking care of you, and it increases your exit options. Sometimes if you need to get out of a property and you just want to get out, I don't want to deal with this, then you can turn and give up some of your equity, and you don't have to give up your money that you've invested, but you can give up some equity and still be okay. So equity is your friend in this whole thing. Faster decisions can be made when numbers are clear. When you understand your numbers, it's much easier to make decisions because you can look at the numbers. Have you ever been doing a deal and the numbers are so tight that you're like, no, this can't be right. There's got to be another way. And you spend 3 or 4 days trying to figure out the other way of doing it, where you don't have to do that if the numbers are very clear. If you know you've got an $80,000 or $90,000 or even $60,000 profit, then if you know you got to shave 10,000 off to get it done, you can do that. And you can just say, hey, chalk it up to the game. I'll learn and do better next time. real estate is it can be very kind of, moving. It's a moving target. So the better you set yourself up, the easier it is for you to turn your profits and do really good numbers. Every part of the process is easier when you know your true numbers. Now, that goes into financing, that goes into closing the deal, that goes into when you put the deal up for sale and how you can sell it. As long as your numbers are easier to see and you can understand them, it makes everything quicker. And when I say clear, because I want to be clear about that, is when you're looking at fuzzy numbers. I'll make something like, or if I rent it out, I'll do something like. When people aren't clear on their numbers, there's a lot of room for error. And that's where people get screwed and they mess up and they end up owing money, or worse, it becomes a liability. Okay, so how do we find these equity deals, these high equity deals? Let's talk about that. And I'm going to get into this a little bit deep. If I'm going too fast with this, let me know and I will try to slow down, or I'll try to explain it better so that you guys, can see everything that I'm talking about. First of all, the best deals are sellers who are not looking to sell yet. And let me be clear about this statement. It does not mean that they are not selling or they're not interested in selling. They have not taken action to actually sell the property yet. It's kind of been like a thought in their head. They thought maybe if something happens, and then you end up showing up and say, hey, I'm interested in buying it. They say, well, you know what? I was thinking about selling it. Let me give this person a call. Now, saying that, a lot of people think that they should be looking for stuff when the seller is not, like if it's not listed on the MLS and all that. That is not really the focus. The focus is on, they have what we want, and then we just let them know that we are buying, not their situation. I don't want you to focus on their situation because that'll throw you off, and that's where a lot of people mess up. Focus on the real numbers, not the situation. And what I mean by that is, people will say, when you look for foreclosures, or when you look for property that has tax liens, or when you look for property that has city code violations, that's focusing on the situation. Have you ever talked to one of those sellers that had one of those problems like foreclosure or tax liens? They're trying to save their house. They're trying to solve the issue. They're not trying to sell a lot of times. And yes, you might catch one or two that say, okay, I can't solve it, so I'll go ahead and sell. But why would you want to do that? Wouldn't you rather, instead of reaching out blindly trying to find these people, let the people that do want to sell and they haven't said anything call you? Just let them call you. It'll save you time. You can go live your life and do what you need to do. Before you market, you have to choose the best places. We're going to talk about that in the next slide, about choosing the best places to market and where you should be putting your time and energy. Okay? Let anyone who fits your criteria know you are buying. They will call you. Don't try to screen them out saying that they don't fit what I want exactly. Anybody that fits the minimum criteria you have, let them know you are buying, because there are deals there. Let's break this down in a few steps because I want you to understand. Are you guys following along? Does this make sense so far as far as finding these deals? So I'm going to show you our 3-step process to finding high equity deals. This is the 3 steps that we go through, and I'm going to kind of break it down for you. Number 1 is find areas, before we even talk to sellers or anything like that, find areas where people want to buy. Now you might say, all right, why do I need to find areas where people want to buy? I want to look for where people are buying so I can sell quickly. So my property sells quickly, because at the end of the day, I'm going to turn around and sell this property. So I might as well start in an area that people want to buy in. Now, what does that do for you? That means that you're going to get out of those cheap areas where it's a war-torn area where it's hard to rent a place out and everything else. Because yes, the properties are cheap there, so it may seem like a deal, especially when they're right on the curb. You ever seen a house where the houses on this side of the street are in a really bad area, but the right across the street is the start of the nice area? So they said, well, the houses over here appraised for this, so this one is very close, so I probably can get that for, get close to that number. You don't want your mind to have to figure that stuff out. You want to focus on letting the numbers push stuff that doesn't make sense for you out. Think about it like your paycheck. When you get your paycheck, the people that save the best are the people that have the money come out of their check before they even see it. That's the same way you want to think about this. You want to not even see the deals that don't make sense for you. You want to screen them out with numbers, if that makes sense, already up front. Okay? Next, you want to look for the most common types of houses that people buy. In our mind, we think, I want to look for 4 and 5 bedroom houses and all these big houses and all this stuff. I want to look for the most common properties because the most common properties, so 3 bedrooms, 1 bath, whatever is common in that area, I want to get those properties because there's a bigger buyer pool of people buying those properties. Okay. So I haven't even talked about what we're looking for. I'm just talking about what we're looking to sell to. Okay. Step two is find areas within those areas that have properties that are below median for the area. Now, below median, let me explain that. Below median is value that is below the halfway mark of everything selling on that market. So let's say you've got some houses on the low end selling for 100,000 in that area, some houses on the high end selling for 300,000, and then you got houses in the middle, and the exact middle number is 225. I want to look for properties that are valued at below 225 in that area. Now you might say, well, why? Why does that make a difference? Because let's think about this. When I am selling the property, which is where most of my energy goes, when I'm selling the property, if I get a house, let's say that's worth 220, and I turn around and I buy it for, let's say, 160, when somebody sees that property when I'm selling it, especially an investor, they're not going to say, oh, this is worth 220. They're going to be looking at the after repaired value, and they're going to say, well, there's stuff in this area that's sold for 400 or 350,000. So they're going to think my deal is a super deal for them because they're getting it at 220, whatever I'm selling it for, and they're thinking that it's a great deal. Meanwhile, I'm selling it at what it's worth today. So it's not a risky deal to me. I'm not hoping that it's worth more later. It's worth what it's worth today. I made my money on the negotiation. Okay. These houses aren't falling apart. They are just below value for the area. So these might be older houses or houses that weren't remodeled. A lot of times they're in move-in condition. They're comfortable houses. They're not, the ceiling is not falling in on this kind of stuff. These are good properties. They're just below the market value as is because there's maybe some stuff that's been fixed up in the area. This is a key factor in being successful with finding under market value because you're getting it before you even see it. You're getting them under market with you're starting off under market and then you're negotiating from there. If that makes sense, it lets you get better deals. These houses won't be on any list. They're not on foreclosure lists. They're not on tax lien lists. These houses a lot of times are owned free and clear, or they have very low mortgages, or the owners are very stable. But that's great because that means there's less competition advertising and trying to get these houses on board. Does that make sense? So now you're limiting your competition and you're looking in areas where people want to buy. Step three, identify owners in the area with a lot of equity. Once you find the area that makes sense, find the owners with a lot of equity. Owners with equity are everywhere. Did you know over 40% of Americans own their house free and clear? That means there's a huge swath of people that have houses free and clear. And when I'm negotiating with them, I don't have to get the house and take all the equity. I just need to get some of it. And a lot of times they are willing to give you some of the equity because the appreciation has gone up more than they expected, and they're happy to get this number. That's kind of what they had in their head. They don't realize that it's worth more, or even if they do realize it, they're okay with not getting all of that because they want to get it done quickly and without a lot of headache. These are excellent opportunities. These owners have issues, but rarely are ever approached. And when I say issues, I'll give you an example. We've got a seller that we're dealing with. The seller is an 81-year-old man. He bought a house for his son and his family, and he bought the house free and clear, so he owns it free and clear, or he bought the house cash, so he owns it free and clear. His son died. And his son died, so his son's wife, his daughter-in-law, and her kids, they're all moving away. They're moving out of state. And so he has this house, and he has no need for it. Now, this isn't a house that would have shown up on any list. He wouldn't have shown up on the dead owners list. He wouldn't have shown up on foreclosure. He wouldn't have shown up with city code violations. His situation is very real and very common, but people don't approach him. When we talked to him, he said nobody had approached him and he wanted to sell. He hadn't listed it or anything else. Okay. Do all of this before you try and ever talk to a seller. We've done a whole breakdown of what we're looking for before we've ever tried to talk to a seller. Okay. The talking to the seller is the secondary side. So these are the 3 green lights to a high profit deal. Okay. Is this making sense to you guys? Are you still following along? Let me know in the chat because I want to make sure I'm not losing you guys. The 3 green lights to a high profit deal. What are we looking at? Number 1, it has to have equity. I don't care if it's the most beautiful house on the nicest neighborhood and it's dirt cheap. If the house is worth $50,000 and they owe $49,000 on it, I don't want to deal with it. I need equity because equity is where I make my profit. So that's the first thing. We need to see that after the closing cost, holding cost, or whatever, we've got equity. Number two is the condition. We want the right things wrong. I'm not looking for the houses where the roof is falling in and the floor is caved in and there's a monster in the basement and all that kind of stuff. I want problems like carpet, paint. Now, that doesn't mean I'm doing that stuff. That does not mean I'm doing that stuff. But when I'm selling it, whether it's a regular homeowner or an investor, they'll look at that and say, oh, I can do that. That's not going to be that bad. And they'll think they're getting over on me. I like people to feel like it's an unfair advantage on me because then they pay me what I want, or better yet, they get into a bidding war and I get an even higher number. Okay, so condition is another part. Third is motivation. Why are they selling? They have to have some kind of motivation, but it's the least of my concerns. If they've got equity and the condition is right, they don't even have to have a great motivating reason. They don't have to be under distress. 99% of my buyers are not under distress when they sell to us or when they sell to our students. They're not under distress. They just want to sell and they have their own personal reasons, which to them are legitimate, valuable reasons. But I want to know that they have a reason. So that's what we do ask. All three of these will ensure you have a profit before you buy. How would you like to know you're going to make $40, $50, $60,000 before you buy? The day you buy, you are capturing $60,000 or better in money compared to later on, you're hoping that you get money. This is going to ensure that, these three. So let's do a quick market scan. So let's say we get a deal. Somebody calls us. They have a house. How do we know that this is a deal we should be even pursuing? Number one, we can pull 3 to 5 comparables. These are, comps of the same bedroom, same bath, and same style house. So we want to make sure that we've got something to look at in that area that's similar to this property and see that what we see those selling for, that's what we see our property being valued at. So if there's a big difference, then we want to know why. Maybe those properties were remodeled, and so they're selling for much higher. That's fine. We want to look for something that's in the same condition if we can find it that's sold and see what it sold for. Next, you're going to adjust for condition and confirm the days on market. Confirming the days on market is vital. When you are looking at properties in this area, you need to know the average days on market in that area, because what'll happen is you'll be happy that you're doing a deal, but you'll forget that the average days on market in this market is 99 days, for example. That means you're going to hold this property for 3 months or better before you sell it, and that's average. And a lot of people freak out and they start lowering their prices and freaking out and dropping the market price just because it hasn't sold in 30 days. Look at the average days on market with other properties. It'll help you get an idea of what's happening. And look at the time of year. We're going into December. That doesn't mean stuff doesn't sell. We're selling a property right now. We've got it under contract, and we got it under contract, I want to say December 2nd. So it doesn't mean they won't sell in December and all that, but you got to understand that people are not going to trudge through the snow if you live someplace where it's snowing, and they're going to look at houses at the same pace that if it's the summertime. Doesn't mean you can't sell it. You just need to understand that with when you're going to put it on the market. Cross-check with the second source to avoid bias. Don't trust you. And I say this because I don't trust me. What I mean by that is we have a tendency when we're working on the deal to be extra rose-colored glasses. We like to think the best scenario of anything we're working on. Have you ever done that when you're looking at a deal and you're like, well, if everything goes right, I'll get it for this and I'll do this. You want to get a second opinion. Now, we've got a way that we do this, but we don't trust our opinion when we're trying to buy a property. We want somebody else to be like the negative side of it and give us, like, in a worst case scenario, you'll make this. And if I'm okay with that worst case scenario, then we do the deal. If I'm not okay with it, then it may cause me to pause and say, hey, I don't know if we should do this. Okay. This is enough to make an offer that makes sense for you. Notice I did not say anything about going to see the property. I did not say anything about meeting with the seller to go negotiate. You can do our entire process, this entire process, from your desk. You don't have to go and visit 16 houses, especially in the wintertime. You can be just as active at your desk and doing deals as you can out in the streets. In fact, you can be more active because I can handle more deals at the same time. Okay. So let me kind of break down. I've been talking about our process, QuickTurn. Let me kind of break it down in plain English what our process is so you understand it. Okay. The first part is buying right, buying in the right areas, meaning places where people want to move to and live. And I'm not talking about just rental areas, but regular people areas, where people want to live. Structure the deal smartly. If you put together a good deal, the financing will be easy. If you've got a crappy deal, your financing is going to be tough. They're going to want higher down payments. They're going to want you to take on more risk. They're going to set you up for all the risks, or as much risk as possible is going to fall on you. If you do the deal right and structure it correctly, your financing will be a breeze. I've have lenders right now that we use, our students use, that do 100% financing. They don't require you to come out of any cash for down payments if the deal is right. And literally, it's not a hard money lender. The interest rates are not 13 and 14%. They're below 10%. And they're good financing that you can use, but the deal has to be structured right. We structure it. Hey, Dennis, good to see you. We structure it so that everything makes sense to the lender side, because the lender is our partner in this. And finally, exit clean. Sell the property fast without fix up. Now, for some of you guys, this might be a challenge because you want to fix it up. You saw the HGTV show and they fixed up houses and you want to do that. Do that after you make some money. That's the simplest answer. Do that after you make some money. Focus on making the money first, and then you can go into fixing up houses if that's what you really want to do. Next, you own the property and you control the outcome. It's more stable than wholesale. I used to do wholesale all the time, and it was very frustrating when my seller would try to either usurp me and go behind me to do the deal with the buyer without me, or my buyer would try to go behind me and do it with the seller. But when I control the deal, nobody goes behind me. Nobody can, because the buck stops with me and stops with my team. You don't fix it up. You don't deal with tenants, and you get cash out fast. That is what we focus on. Fixing up property is not the most profitable thing you can do with your time. Dealing with tenants is not the most profitable thing you can do with your time. The most profitable thing you can do is finding high equity deals and negotiating with those sellers. Everything else is secondary. If you can do that, you don't have to have any other skills, and you can make very good money. Okay. QuickTurn is excellent for building cash and scaling your business. Now, the way we do QuickTurn, and I've talked about this in some of the other videos, we do QuickTurn of buying and selling single family houses. I don't believe single family houses are an investment grade asset. The reason I don't look at them as an investment grade asset, they're made for people to live in, and they're single family. I would much rather take my cash and put it into commercial deals and make money on that. One, the numbers are much bigger. If I'm going to be making money and taking on risk, I might as well make more money. So I take the money and put it into commercial. The other benefit is when you put it into commercial, then you can avoid a lot. I don't want to say avoid, you can defer a lot of the taxes if you set it up right when you go into commercial. So I can literally take the money I need to live off of the deals. Then once I get past that, I can take the rest, put it into commercial, not have to pay taxes on that right now, build it up in commercial. And then when I sell that commercial, I can take that money and reinvest it into an even larger commercial deal and keep the money rolling and growing and get cash flow. Okay. That is what we do with QuickTurn. Part two is, how do we exit fast? Because this always comes up, so I figured I'd answer. Number one, after purchase, we immediately put on market to sell to anyone. How many of you guys are wholesalers, or you keep a buyer's list of people that want to buy your properties? If that's you, just say me. And here's my response to that. Why would you ever want to limit who can buy your property? Think about that. Why would, if there's 10,000 people in my area, how many of those people do I want looking at my property to try and buy it? Why would I have a list of 30 buyers and only those 30 buyers get to hear about my property? I want everybody to hear about my property, because the more people that hear about it, the better chance I have of putting together a good profit for me, and maybe even getting into a bidding war and selling it even faster and making more money. Okay, so we sell to everybody. Two, sell the property at today's value. You negotiate your profit. You don't have to say, well, in the future it'll be worth this. Let them figure all that out. Everybody does their numbers differently. It's not going to benefit you to try to do the numbers for them, because they're not going to agree with your numbers, and they're going to check your numbers anyway, because they're not going to depend on them. So instead, just tell them, this is what I'm selling it for. This is what it's worth today. Boom. When you do whatever, then it's worth whatever you thought it was going to be worth. I'm not trying to figure that out. You figure that out and just give me my money. Okay. We also use tools like landtrustx.com to quickly sell the property at market value. For those of you that aren't aware, Landtrustx.com is a website you can go to. You can put your property on the website and it changes that property into shares like a company, like stock. And you can sell those shares. The benefit is I can sell the entire house like shares, and I get paid market value, and it's faster and it's cheaper than going through a traditional sale. So this is another tool that you can use to quickly sell property and get rid of it without, having to go through the traditional process. This allows you to build cash quickly without long holding costs. So this is something you can do without having huge holding costs. And you're gonna have to hold on to it for 6 months and do rehab and everything else. I like to say we buy it on Friday and we're putting it on the market to sell on Monday. And we use stuff like Land Trust X to do that so we can get rid of it quickly. Okay. Now, one more thing I want to bring up before we get into questions is avoiding these time wasters. These are things that typically will waste your time. They seem like what you should be doing, but they can waste your time. And if you came on late to the call, don't worry about it. We will put the replay of this call out tomorrow. You will have a replay for the full video and you'll get it in your email in the morning. As long as you got on this call, you'll get the replay. So you can still stay on, but you'll be able to get the full video tomorrow. One thing to avoid: full rehabs, big structural mechanical issues. If you buy a house and everything on the house is great, but the furnace is destroyed and you got to spend $7,000 or $10,000 for a furnace, how much value do you add to that property for putting in that furnace? Nothing, because nobody cares. Everybody expects a house to have a furnace or a central air unit or whatever it is. Big mechanical structural issues are not going to help you. And I try to avoid full rehabs. Not that I'm going to do a rehab anyway, but I don't want them because then that allows the buyer to negotiate, this is going to be all of this. And it just opens up a whole Pandora's box. So we avoid these because these are time wasters. Another one we avoid is overpriced wish sellers. This has been a really big thing the last few years. You will literally get calls from people that say, hey, my house is worth $200,000. Okay, well, what do you want to sell it for? $350,000. So it's worth 200 and you want to sell it for 350? Yep. And I've learned, don't even try to negotiate with these people. Don't try to convince them. Here's what you do. Let them go. And if somebody else is silly enough to pay them 350, God bless them. Otherwise, let them go, and then you can follow up with them later. And when they don't sell, then they'll talk to you. I just had a guy that literally did this to us, and he came with some ridiculous number. We followed up with him for a year and a half. We have a process. We teach this process. We followed up with him for a year and a half. We bought that property for $40,000 less than we offered him a year and a half ago. So he could have literally sold it, got $40,000 more. We got it for $40,000 less. And the property is still in good shape in a good area. Okay. So I don't deal with overpriced wish sellers. I don't waste time with talking to them. Third, hot zip codes with bidding wars. Have you ever gone to your realtor and said, I want to buy an investment property? And they say, well, let me give you the hot zip codes. Let me show you where everybody's buying. And they get you into these areas where the numbers are so ridiculous that they're fighting to get a property. The house went on the market yesterday. That's got 22 offers. I'm not trying to be in the middle of that. There's too much money on the table in other areas. I don't have to get into those bidding wars, and I don't suggest you do it. And it feels like, and then you're more than likely to pay more than you should for the property anyway. You can't get a deal on it because it's 20 something offers on it. Cheap house areas where no one wants to live. I call them rental war zones. The areas where I'll put it this way. One time I had a rental property. It was a 4-unit building and I bought it and it was cheap. And my thought was, I bought this place cheap. The neighborhood is only okay. It's not really great. It's kind of rough, but at least I got it cheap, and I got it so cheap that I can rent it out for cheap and I'll make really good money. I was showing the apartment. This was 20 years ago. I was showing the apartment to a tenant or a potential tenant. And literally, as we were walking out of the building, a guy was chasing another guy down the street, shooting at him. We ducked down in the doorway. And she literally walked out and said, okay, yeah, let's do an application. I'm ready to. And when she saw that and I saw it, she said, yeah, we're going to keep looking. I said, I don't blame you. And I got rid of the building. You don't want to get into war zones. They're attractive in the sense that you get them for cheap. But at the end of the day, they can be much more headaches than you need to. And you don't have to use war zones to make money. There are people that make money in war zones they are okay dealing with all of that stuff, you don't have to do it and you can be very successful. And even if you're keeping it for a short time, I don't want war zone properties. Okay. So those are the ones you want to learn, want to avoid, the kind of stuff you want to avoid. Now, want to learn how to find these sellers. We talked about high equity sellers. If you want to learn, we can show you how to find 5 high equity sellers in the next 14 days. Now, that is a big, bold promise. Let me explain how we're going to do that, what we do to help you find 5 sellers in the next 14 days. We're going to show you how to choose the best areas around you, not by guessing, not by being hopeful. You don't have to go all over the country. You can literally do everything you need to do in a 50-mile radius of where you live. And I don't care where you live, you can do this same thing. We're going to show you 2 ways to market without breaking the bank. So you don't have to spend every dollar you've ever made to market to find these properties. And you'll be able to do it one of these 2 ways. Okay, we're going to learn what to say to get sellers to tell you their real motivation. Why are they talking to you? Why did they call you? Why are they reaching out? We're going to show you what to say to those sellers to get them to get, and we're going to do it in a way where sellers know the questions that investors ask. We ask them in a way where it completely catches them off guard. We even got a question that we can ask sellers to get them to do owner financing, and they never see it coming. Okay, so we'll show you that kind of stuff. Now, this is a $99 quick turn sprint. That's what this is. You're going to use this to talk to 5 or more high equity sellers in the next 14 days. Okay, this is what we teach you. You're going to get our scripts of what to say. You're going to get the list of who to talk to, how to find these people, how to do the pre-marketing that I talked about, all the stuff you do before you talk to before you even start looking for sellers. You're going to get the mail process, and you're going to get a tracker to track your results. Now, before you say, oh, I don't know, it includes daily check-ins and accountability steps so you don't stall, because I don't want you to get into this and then say, I can't do this. This is too much for me or whatever, and you can't really follow it and do all of that stuff. Most importantly, if you follow all the steps, if you follow everything that we're talking about, you can earn your $99 back. So if you follow all the steps, go through everything, and you get the results or don't get the results, you can earn your $99 back. The biggest thing is that you take action. And the reason we did this is 2 reasons. One, we want you to take action. I'm more concerned about you taking action. I want to work with people that take action. I do not want to work with people that say, oh, it's great, I got into this, and then they never do anything. We are willing to give you the $99 back if you follow the steps and work through it, because we're confident that it works. And then once you do these steps, once you go with us and work with us further, you'll see our full process and you'll see what's valuable, because honestly, we have a reason for doing this. We want you to become successful in this, make some money in single family houses so that you can go with us to work in commercial. We do commercial deals, larger deals, and we buy them as a group. And we're working to build an army of people that buy these commercial deals with us. But in order to do that, you got to build up some cash. This will allow you to build up some cash and kind of get going. Okay. So you're going to talk to 5 high equity sellers in the next 14 days. We're going to give you everything you need to do that so that you can follow along and do that whole process. Now, to get started, if you're interested in this, just comment equity in the chat and I will get you the sign up link. I'll share that with you. If you comment equity in the chat down below, and if you enroll today, you will get all the details and everything. You can literally start today. It will give you the day 0 setup. It'll tell you what to do today, right now, to get started, and you'll start this process. It is not hard. It is not something that most people can't do. It's not any kind of tricks. It's a simple process, but it's for someone that's willing and ready to take action. Okay? It's a no-risk way to learn, practice, and make real progress. If you've been sitting on the sidelines and thinking that you want to get into this, but you're not sure, this is about the safest way to get in and kind of see what it is about and get into the process, and you're not risking anything. Okay? Let's get you talking to sellers and winning your first deal in 14 days. Okay? So that is my whole thing. If you want it, like I said, comment equity down below and I will put the link in the chat. All right. So that is my presentation. What I usually do at this time is I will answer some questions and kind of see if you guys have anything to go over or something you're not sure of. If you have questions, raise your hand or put in a comment. Hold on. Chris just asked how I'm in the 14-day sprint. I completed the 10.
What's up, buddy?
Hey, is this
Shit,
Chris?
hell, I don't know it. How you doing?
Let me mute this. I can. Let me mute somebody. All right. So what Chris asked, I emailed the ones that were, is there anything else at this point? Yes. So Chris, no, there's nothing else you need to do. I know they do have your information, so they should be setting up Your mail, you'll get an email probably tomorrow saying that everything is set up for you and you're good to go. You did everything that you're supposed to. Make sure you do your post. You're supposed to do post. You were supposed to do your post and everything. I haven't seen them. You might have done them and I just didn't see them. But yeah, go ahead and do your post and everything else. But Chris, you're doing an excellent job and I see you moving along. So you're doing great. All right. So any questions on this process or what's involved? I'll tell you this. If you're worried about, a lot of people ask, hey, we're looking for, when looking for properties. Oh, Angela, okay, hold on one second. Angela, let me get you the link. Hold on one second. All right, Angela, I just sent you the link. Mike, when looking for properties to target, are we looking for only high equity or other factors like high equity and foreclosure? No. Good question. No, we are not. Mike asked, when looking for properties to target, are we looking for only high equity or other factors like high equity and foreclosure and absentee? So we are not looking for foreclosures. Foreclosures, when you are in foreclosure, you have a different mindset. That is not what we're looking for. We're looking for people that legitimately want to sell. So we'll go over the full details, but no, we are not looking for foreclosure. I don't care about absentee. People that live in the house, people that don't live in the house, they still want to sell. The number one factor is high equity. The foreclosure, I don't look for foreclosures or let me clear that up. I don't look for anything that is a stress for someone to sell. So foreclosures, tax liens, city code violations, any of that negative stuff, I don't really deal with. I don't think you need to. I don't think you, in all honesty, you can do this. And there are more than enough people that own a house. Let me give you some examples. A seller that inherited a house from their mother or their parents, and they live out of state and they want to sell the house, but they don't feel like going back to the state to deal with it. That's a situation where it's not going to show up in any of those lists, but those people want to sell their house and they don't want to deal with it and they're willing to cut a deal. A seller that bought a rehab and then they ran out of money. They started the rehab, they ran out of money, and now the property is just costing them money. We do those all the time, and they will sell because people think they're going to have a decent contractor. The contractor runs off with money. The contractor does a crappy job on the rehab, and we buy those properties. People that are relocating, they got a new job that transferred them to, Texas, and they're from Florida. They want to sell, and they don't want to have two houses, one in Florida, one in Chicago, or one in Texas, or wherever they're at. So there are all kinds of situations where people have situations that are not going to show up under distress. We have to stop thinking that distress is the best way. It is legitimately. And here's the thing. Everybody's looking for distressed. Everybody in your market is looking for distress. If you ever go into foreclosure, I'm not suggesting you go into foreclosure, but if you're ever in foreclosure, you will get 16,000 letters saying, we want to buy your house. Why would I want to compete with 16,000 letters? When you own a house free and clear, and you just decide that the guy that we're talking to, like I said, that his son died and he just wants to sell the house. How many letters do you think he gets? How many calls do you think he gets? He gets literally none. He gets, David said 17,000, right? Or what are you saying, David? They get 17,000. Yeah, they get seven. When you're in foreclosure, you get 20,000 letters all the time. Yes. And why would I want to compete with that? Instead, I want to be where nobody is at or very few people at. Compare that to free and clear. Let's say 3 people or 4 people are sending to free and clear. And your thought might be, well, it's free and clear. They probably don't want to sell. That's what everybody thinks. That's what everybody thinks. And so they don't do it. The money is there. You're just not taking advantage. I have made my career of finding those houses where there was no stress. The seller is happy. Sellers, when we close, I've had sellers give me hugs afterwards and say, thank you for me not having to deal with this. Thank you for just making this easy. It does not have to be a stress, does not just come from foreclosure. Foreclosure and absentee, all that's a buzzword that's meant to get you excited. It's not the best way, in my opinion. It's not the best. There are much better ways, okay? For sale by owners. No, I don't like for sale by owners. If they have the criteria and they are for sale by owner, they might get some of my stuff, but I don't force them to. I don't think it's something they have to do. I'm going to put the link in the chat just in case anybody wants to sign up for the $99 sprint. Like I said, it is $99. If you follow the steps, you get your money. You can earn your money back if you follow all the steps and complete it, whether you get the result or not. But it's meant to get you started and see that you're going to take action. So that's the link if you want to get onto the sprint. So no, the for sale by owners, that's not a primary reason that I'm looking for. because just because they're selling it by owner doesn't mean that if they have what I want, if they've got equity, then yeah, I might talk to them, but that's not my main reason. So I hope that makes sense. Now, you might say, well, how do I get enough of these deals? Here's the thing. When you learn to market to the right properties in the right areas, you will sell them faster. That's the first thing. You will be able to negotiate better profit on the deal. That's the other thing. My average profit and my students' average, my average profit is about 35,000 or better on a deal. Now you might say that's not a lot of money, 35,000. But here's the thing. That 35,000 takes me usually about 4 phone calls, and I never leave my house to do that deal. So I can do 7 of those deals in a month, and I cannot miss a bead of sweat off my brow because I can do them easily and they're very fast, and I don't have to go over there fixing them up. I don't have to visit the house. Most of the properties that we get and our students get, they never go see the house. They never physically step foot in the house. They never physically seen the house, and they're still able to do deals and turn profit. And when you do that, you can turn quantity over quality. Now, that doesn't mean we don't get occasionally a 50,000, a 80,000, $100,000 deal. We get those. I just had a student a couple of months ago do $175,000 profit deal. She did 175,000. The student that's doing one of my other students that's doing a deal right now, she did $134,000 on her first deal. She's now working on another deal. She's probably going to do somewhere around 108 to 120, something in there on her next deal. These deals they're all there. They're all available for you to do. It's just a matter if you know where to look and you're willing to be diligent with it. The other thing is being persistent. Can you be persistent with this? Can you do this in a way where, look, I'm going to do this, I'm going to follow the process, and I'm going to stick with it? A lot of people struggle with this whole shiny object syndrome. They hear the next thing, and the next thing sounds really easy, and they're thinking maybe I should do the next thing. You can do the next thing, but everything is going to have its challenges. It's like learning something. Did you get multiplication the first time you did it? If you're like regular people, no, you didn't. You had to learn it and practice it and mess up and keep going at it and get it until you did. But once you got it, you can do it like that because you got it down set. That's what you have to do with this process. This process doesn't require you to get dirty. I'm not going to have you running to Home Depot every weekend. I'm not going to have you running behind and your car looks like a whole Home Depot inside the car. You can do this process and it's not going to be that kind of work. Your work will require you to do three things. One, set up your marketing. Two, answer the phone. When they call you, answer the phone. Don't let it go to voicemail. Answer the phone. And then three, talk to the seller. And you don't have to be hard and mean and talk to them. You just have to talk to them. Most of my students are women, and they don't consider themselves very aggressive when they're talking to sellers. You don't have to be very aggressive. My wife does a lot of the talking to sellers, and she doesn't have to be very aggressive. You just have to ask the right questions that actually matter. I'm not going to ask you questions about, your neighborhood. I don't need to ask you questions about your neighborhood. I need to ask questions about the property, your value on that property, and the situation when it's time. You ask them in the right order, they will open up to you like a book. You ever started talking to somebody and they're telling you something, and then after 20 minutes, they're telling you about their kids and the dog and everything? The guy that's selling the house, the 80-something-year-old guy, he told me about his retirement. He's talking about his kid that died. I know how his son died. He's talking about the mother of his kid, his son's mother, his daughter-in-law. He's talking about the kid. He's telling me everything. And while he's doing that, he's telling me about the house and why he's really motivated. It's not hard. It's just a matter of, are you going to do it? Now, if you are, and this is, to me, and I'll say this is a job replacer. If you're somebody that's concerned about your job, or if you're going to stay on your job, how many of these deals do you need to turn a profit? How many of these deals? One of my students, Kyra, did her first deal. She turned a $50,000 profit on her first deal. Now, I'm not saying that's replacing her whole income, but that was one deal. It took her a couple of months to do it. She's doing more deals as we speak now. Yolanda, one of my students, her first deal, she did $134,000 on her first deal. She replaced her annual income on one deal. Imagine doing, now I'm not saying you should do one deal and then replace your income and then stop working for the rest of the year, but you can do that, and then you've got the breathing room to grow your business and keep doing it. And it all starts with this $99 sprint, because that's the first steps to get started. But if you can't make that kind of commitment, then you're probably not going to follow through. And it's not like this is tough, but it's going to require you to do a little bit of work. You got to do something to get a different result than what you've gotten. Does that make sense? Any questions? That's my spiel. Any questions for me before I move on? Any questions about the sprint? Any questions about how we
Period.
find these deals?
Touch slow.
Any questions about any of this stuff? Okay. Any questions for me? If not, what's the next step? And Mike asked, what's the next step after the sprint? So at the end of the sprint, the best thing to do is get on a call with us. You will talk to me or one of my team. We will talk to you about working with us to do this full process, to go through the full process, negotiation, getting the contracts, financing the deal, closing a deal, getting your first check. And then hopefully from there, we can talk to you about even going further and eventually going into commercial with us. We'll do that and we'll kind of walk you through that stuff. And you can do all of this stuff. We have great options to get you started where it's not going to be, you're dropping $100,000 with us before we tell you anything. That's why we do the $99 sprint with the ability to get your money, earn your money back, because we want to show you that, hey, we're legitimate. What we're telling you to do is legitimate. And as long as you follow it, you will have success, if that makes sense. Okay. So that's the process. And we'll kind of get you rolling from there and we'll grow from there. And if it makes sense, we'll take you on to working with us in commercial and doing those kind of deals. Okay. All right. So I hope that answers the question, Mike. Any other questions for me that I need to go over or discuss? Did all this information make sense for you? Okay, good. Good. Did all this information make sense for you? Is this the only cost of the program? So that good question, David. This is the cost to start talking to the sellers. If this is the only required cost, there's two options for you. Let me be clear. There's the door example and the desk example. If you do the desk process in this sprint, there's two ways you can do it: the door knocking and the desk. If you do the desk version where you're not going to leave your desk, then there is a small fee for marketing, which is just paying for your marketing. It's not going to us other than to pay for the marketing you're going to put out. Once you do this, you're going to start talking to sellers. If you want our help beyond that, once because a lot of people, their biggest concern is, I want to try to find deals. If you need help beyond that, then we'll talk to you about working with us, in our group, or we can work with you one-on-one, depending on what you want to do. It depends on where your goals are and where you want to go. We'll talk to you about that. You don't have to do any of that stuff if you don't want to, but we're there if you want that additional support, and we'll walk you through actually doing this whole process. So that's what I would suggest. Lajana Carter, did you say I do? You have a question? If you got a question, Lajana, then either unmute yourself or you can ask it in the chat. Either one. Let me know. That was your okay. That was your question. Okay, is that the only cost? So this is the first cost. Is for the 14-day sprint. There is no must pay cost after that. I want additional help, or Art, I got this seller and I'm ready to not even negotiate. I'm ready to finance it and everything else. If you want that help from us, then yeah, we can get you set up. We'll talk to our team and we'll show you the next steps with that. But you don't have to have that. If you're comfortable with it, we'll show you the process. It's not hard, and you'll go through it and do your first deals. And then once you start making some money, and here's the thing, some of you are going to say, well, what about credit? What about I don't have a lot of money to put on a down payment. Don't worry about that. Worry about the deal. I've literally not had money in my bank account at times, and I was still able to do a deal because I know how to put together the right deal. If you know how to put together the right deal, you will be able to get the financing. I don't care what your credit is at. I got students right now that have credits in the 500s. They shouldn't be able to do anything. And they're doing deals right now all day, every day. And they're doing them. Now, what I will suggest is after you do your first deal and you've made some money, use some of that money and get your credit in order, because when your credit is in order, you can fly. You can do that many more deals that much faster. But you don't need that to get started. It's not going to stop you. The only thing stopping you is either you not taking the commitment, or you saying, hey, I don't think I can do this, or you just don't want to do it. But the credit and your money that you have up front is not going to stop you. And what's the risk? Are you saying that literally going through this $99 to see if this works, to try it out, to follow the steps, and then if it doesn't work and you follow the steps and you get your money back, you wasted your time finding out and learning this process, versus if it does work, you're better off. You're better. You have a skill set that you can use to start earning some more money and earning significant money without taking on a ton of risk. Okay. All right, guys. So that's
Wait,
it for the.
okay. Or I do have, okay.
Who is this?
So in this LaJohn again,
Okay.
in the
Hey, what's
first
up?
14 days, if you get the, it say if you have the fish on the hook, right?
Yep.
After the 14 days, then what? If we already was successful in that first 14 days, but I'm sure we're not gonna be able to do the whole process in the first 14 days. So
So, so you'll get with when you do the sprint, you'll get everything to get through the contract and everything else. So we'll give you all of that stuff to get started. If you want additional help, when at the end of the 14 days, we sit down and have a call with you, and we'll talk to you about where you're at, what help you need, what it looks like if we help you versus what it looks like if you. We'll give you some advice. If you want to go it alone, that's fine. We'll tell you this is what you need to do. Either way, we'll help you. And you can do, even if you go to that next level, we've got financing options to work with us on a bigger, and it's not, it's not 10, 15, $20,000 to work with us. It's very affordable, and we've got financing options. Some of those options allow you to pay nothing up front, and you can actually get started, do your deal, and then pay it off when you finish your deal. So I kind of give everybody as much opportunity to be successful with this as possible. But the caveat with that is that you got to do it. I don't care how comfortable you are watching videos. If you don't do the stuff, you're not going to get results. But I will tell you that, and you're going to feel, some people are going to feel silly. This doesn't work. I don't know if this works. I felt silly when I started too. I felt like I don't know if this is really worth it. And I did my first deal. Our first deal we made $20,000. It took us about 60 days to make $20,000. And we didn't came out of no money out of pocket. I did not put a dollar into it. In fact, the only thing I did do with this house was I went over to the house and I met the inspector when we were buying it. No, when we were selling it, I'm sorry. When we were selling the property, I met the inspector and he just verified that everything was okay. The house was not falling apart. It was a very nice house. We sold that property and we made $20,000 on the tip, right? It wasn't $20,001. It was exactly $20,000 that we made on this property. And that was all profit. And I felt silly all the way up until I realized I was getting a $20,000 check. And that was when I didn't know what I was doing exactly. And we did 20,000. The next deal, we've done deals as large as I've done a 27 property portfolio. And we bought that portfolio for under 900,000. It was like 800 and something $1,000 that we bought it. When we remember, I told you this whole thing was making your money on the profit on the way in. Those same 27 properties, when we bought them, the day we bought them for under 900,000. They were worth $3.1 million the day we bought them. We sold 8 of them to the tenants that were already in the houses, and we sold the rest of them to everybody. And we made over $1 million. We made easily over $1 million. We made close to $2 million, and it took us 4 months to do that. Now, with that one, we did have some money, but we used money that we had made from doing other single family deals, but it pushed our business to another level. And there are deals out there like that. This guy was literally an older guy. He had cancer. His wife did not want him to spend the rest of his life, the last few years of his life, dealing with rental property. He sold his entire rental property portfolio, and he just wanted to get it and get cash quickly. And he went to Paris. He ended up to his wife. Him and his wife went to Paris when just to go to Paris. I don't think they lived in Paris, but they went to go to Paris. We put the deal together, and like I said, we did over $1 million in profit on that deal, and it took us 4 months. This is not, and here's the thing: I did not have the money to buy. Let me be clear, because I don't want anybody. You had $800,000. I did not have $800,000 to buy this portfolio. But remember what I told you: if the deal is good, the financing will not be a problem. And the deal was good, and the financing was not a problem at all. We were able to put the financing together. It took us about a month to put the financing together. It took us 3 months to sell the properties, and we walked away with over $1 million profit. Okay. And I don't say that to brag, because I'm not bragging. What do you mean it's not letting you click on it? It should be letting you click on what is it? What's not letting you click on what? I can tell you, Lejana. So it's not a process. It's not something you can't do, but what I will say is that it's possible, but you just got to take the action and actually do it. Oh, down at the bottom, you got to agree to the terms down at the bottom, and then it should let you click on everything. Edna said card number. I'm not sure. It might be that it's telling you at the bottom to click on the agreement before you can put in the card number information. So I'll check on that. But so yeah, it's a real process. It works. It's a real deal. It's not something that is scary or is something you can't do. You just have to take the action and actually get to it. All right, guys. So I'm going to end it here. I think I've answered everything you guys have had. If you are having, I have a 27 property in South Carolina, now straight to own a 22 single families, 5 lots, and cannot find a buyer. Owner willing to take seller financing. Wow. Well, then you should definitely. Now I don't know the numbers on that. You know, if you want to talk about it, I can't see. If you want to talk about it, we can. I don't partner with people, but if you want, we can do a one-on-one. I can talk to you about, they're mostly vacant. Okay, I can talk to you about how to put this together. There are definitely fine. I don't know your situation. If you want to talk about it one-on-one, you can get the Sprint. That'll give you access to us. And then you can talk to us about it and we can talk to you about how to put that deal together. I do deals like that all the time, and I can tell you, you can do those deals provided the numbers are good. I don't know your numbers, so it sounds like you could have something, but I would have to talk to you more directly. Okay. If you want to do the desk version, you'll see after you sign up with the $99 Sprint, you can add the desk version on. It'll come on the next page, and that's a good way to get started as well. And we'll get you guys going and see you do some deals. If you came in late, we will be putting this out as a replay tomorrow, so you will get the replay and you can sign up and watch the full thing tomorrow. All right, guys, I wish you the best. I will talk to you later. And as always, happy hunting. See you guys later. Thanks for being on the call. Bye-bye.